Well, I got to say this. Psych out in the silver market, and a lot of people for the last year or so are getting very much dissuaded from buying silver unless they're buying it around 27, 28, 26, and then selling it around 33, 34, 35. But who the hell knows if it's not going to break through that point at the next juncture? Because, there's also the super bears out there that are saying, yes, it's going to hit down to 26. An old girl here is just dusting herself off her bike. I just got to say this. Chill out about the silver markets. Like old girl out here, she's out there cleaning her bicycle, chilling out. She's relaxing a little bit. Don't worry about it too much. It's not going to fall that hard. It's the only direction it's really going to go hard at some point in time is up. So just beware of that. We don't know when it's going to happen. Silver's a devil's metal for a reason. So just like old girl here is chilling out on a bike, you got to chill out. And this is a nice bike, by the way. This is a Lightspeed titanium. Titanium is like if you buy a bike, and actually this could be a good damn investment too. Very expensive frame, but you'll never break it. You'll never bend it. It's flexible in some ways, a slight amount, yet it'll never rust. It's light as all hell, and fatigue on it, forget about it. It'll outlast 10 humans or something. So titanium bike frames can be a very good investment too. But let's talk about silver. People are actually scared, I think, now, and the market is fearful. Yeah, and actually what's really getting killed is the silver stocks, and I got a few of those, not too much, but they're getting killed, but I'll just be patient. I'm almost tempted to go back in them. If I see a hard dip, I might go into it hard on any kind of 10% gain. I'll dump them out. But today we saw a spring back in silver, platinum, palladium, gold, but especially silver and palladium. Palladium has been holding up very well. Now, I dumped that stuff electronically, but it depends on what happens. Palladium is a weird animal because there's a lot of stuff you can't tell what's going to happen with it because the Russians dump on the market. Like, for instance, in 2011, they dumped on the market even though it was record demand, record usage. More supplies were pulled out of the ground than ever, and actually they couldn't even, they had a shortfall. The Russians dumped a whole pile of palladium on the market and drove the price down basically in late 2011. So, but similarly, they could do the opposite. They could drive this stuff way the hell up. So, I actually might sell a tiny bit of physical if it goes to some crazy price, like it breaks 1200 or something like that. I might sell a tiny bit of physical. It depends on how fast it moves up. But I want to show something else out here. It's kind of interesting. This is basically a commodity index from the Commodity Research Bureau. That's what that stands for, CRB. And if you look at this, it's actually been dropping, right? The commodities overall. This is like all the commodities. This isn't just precious metals. This is everything. The base metals, oil, agriculture, the whole deal. Now, if you look at the JPM manufacturing index, though, it looks like there's more demand coming on. Now, I find that kind of unique and interesting because why would commodities drop when demand is going heavier? It almost tells me somehow some of these numbers, the one numbers I could trust is the actual price value of the commodities themselves. The one thing I really don't trust is this JPM Global Manufacturing Index. There might be inflated numbers. The actual economies throughout the world aren't that rosy. And the word currency wars, like old girl here is chilling out, waiting for the currency war or whatever. But, I just got to say this. You got to chill out about this shit. That's why I show the bicycles and stuff. Just chill out. Bicycles actually therapeutic. So if you get all crazy about the markets, go take a cruise with old girl here on a bicycle. But currency wars mean this. The economies of these countries are devaluing their currency because they want more exports. The reason they want more exports is because their economies are shit. Okay? That's the only way I could say it, right? They're lousy. They're no good. So they have to try to boost their manufacturing output. But, if you're looking at this JPM manufacturing index, it looks like it's going up. It looks like there's growth worldwide. Is there growth worldwide? No. Actually, the only two rosy spots on this thing throughout the globe is actually the United States and China. But I don't trust it. I don't trust the Chinese numbers either. I don't trust any of those numbers. So you got to figure this. Why are they doing currency wars? Currency wars, in other words, try to boost exports, so they're devaluing their currencies. And that's kind of crazy that you're seeing the commodities actually drop during currency wars. You know, I got a feeling something's going to change here pretty quick. And, you know, the one place to probably be in is the mining stocks right now, even though they're making shitty money right now. But some of the mining stocks, if they start getting any more depressed, it's probably a good time to buy. I mean, it's really hard to say when the actual bottom's going to be in, but actually if there's a bad day for the market, say some Euro news comes out and you see a lot of drop in all the stocks across the board, that might be the time to buy some mining stocks and see if they spring up. I mean, if you get a gain, dump them. May not be a long-term hold, because I'm going to do that with some short-term speculative holds, and I'm going to keep some long-term holds. But just like old girl here is just sitting on a bike, ready to, you know, take the rocket ride, you know, chill out. That's exactly what we're doing with silver. We're sitting on the metals, just chilling out, waiting for the rocket ride, because that's basically what's going to happen with silver. So, you know, it's not going to. It's far more likely to spring up radically than it is to spring down. It's not going to go to 15. It's not going to go to 18. Doubtful for 22 and doubtful even for 26. You know, you could say that with a little more confidence today as you look at the markets and you say, oh, yeah, it's going up today, so you feel more confident. But you got to remember this, too. Why would the markets drop? Would it be because of a devaluation of the dollar, another freaking hit on the one of the agencies downgrading the debt? Actually, in the UK, Moody's actually took away the UK's AAA rating just recently. I think it was the last couple of days. That's the first time that happened, too. So now if there's another rating agency like Moody's, like the S&P downgraded the U.S., but the Moody's hasn't, but the Moody's has threatened to do so. If they downgrade the U.S. debt, you'll see the metals go up and the markets go down. See, the markets right now are actually being held up artificially. And see, this is my point on this stuff. I don't trust these numbers. These numbers where they're saying the global manufacturing index is good. Why are they doing currency wars, right? You know, it's almost like the markets are overinflated too. If the markets are going up and everything's production's going up and manufacturing's going up, how come the commodities aren't getting price pressure pushing them up too? See, this is a good index to look at, this Commodity Research Bureau, because basically it's all the commodities, all of them. So what's going on? It tells me the actual numbers you're getting off of this the manufacturing index globally is probably fictitious. The demand is depressed everywhere, and the only place that's really inflated is the actual equities markets, the S&P. But if the S&P goes back down very hard, why would it go down? It may be because of a problem with a ratings agency saying that the U.S. dollar is not looking very well, or whatever, it's looking sicker. You know, we know it's sick, but when a rating agency acknowledges this and actually downgrades the debt, you'll see the markets tank. So, but that doesn't mean silver and gold will tank. People run out of the dollar and actually go into hard assets. So you'll see an opposite takeoff in the metals. So, you know, things are actually looking pretty good. I just got to say, like old girl here, you got to just chill out, you know. And if you want to make an investment besides silver, you know, one freaking bicycle you could probably get is one of these light speeds, titanium in frame. You'll never wear it out in a million years. And by the way, as a side note, I've installed a classic shell on my computer, one of my other laptops that had Windows 7 on it. I never use it. It's like a later laptop than this one, because it has Windows 7. Well, guess what? It looks beautiful. This looks like classic shell Windows, and I'm going to use it. So I'm going to probably purchase another laptop with, hopefully I can find Windows 7, not Windows 8, and put classic shell on it. So that might be a good purchase to make, and just chill out on this, because the metals aren't going to go down to 22. They're not. I think if there's a catastrophic collapse of the markets and equities, it's not going to mean the metals are going to go down. The metals might actually go up. Oil might go down, but it depends. It depends. If it's due to tensions in the Middle East at the same time, oil and all the commodities and gold and silver will go up at the same time, and the equities will drop. See, that's one reason you hang on to cash too, because maybe that'll be a time to buy the equities, correct? So anyway, just chill out like old girl here is, have some fun, you know, clean off your light speed bicycle, titanium frame, And actually, a titanium frame Lightspeed bicycle will probably outlast your silver investment by many decades, believe it or not. And you'll actually be able to drive anywhere you want for like a cheeseburger and fuel. So, not a bad investment either.